Recording in progress.
Okay. Welcome everybody. Welcome to the session. Okay, can you hear me now? Let me know if you can hear me. Okay, amazing. So today, what we want to discuss is how we can use a software. But before we go ahead to discuss with how we can use a software, let me hear from you. Give me some of your feedback so far on the simple trading methodology and also the software. Give me your feedback. How have you been using it? What have you observed? Have you been making profit with it? Let me hear from you. Unmute your mic and talk to me. If you have been using the software or the simple trading methodology to trade, let me know how it has been going well for you. So nobody has traded with the software.
Hello?
Or the simple methodology.
Hello?
Oh yes, I can hear you.
Okay, sir. The only problem on my own side that if I did not enter the trade in time, maybe it's about going towards the assuming it's from the support now. If I enter late, at times I may not get the real profit the way it's supposed to be.
Okay. What time frame are you trading with?
I do use 1 hour at times, then 4 hours.
Okay. Who else has something to say about the strategy and what we have?
Professor, good evening.
Yeah, good evening, sir.
Good evening, House. I'm Bizrano FX.
Okay.
So, I just want to ask a question as regard to the training methodology because I've not used it. I'm still studying it because I don't normally have time like that. I'm just still trying to get the training clearly. What I want to ask is that, in your analysis, you said you must use the right lot size, that's $100 for 0.01. So my question is, if one don't have $100 in the account, that means he cannot trade that hacking chart style.
Okay.
That's my question. Okay. So two, my second question is how does that hacking hash now connect to the MT5? Because you said after the analysis on the hacking hash, we should go to MT5 and take trade. Does that mean it's already connected? Those are the two questions I have for now.
Okay. Okay, now let me answer your question. Thanks for those who commented, those who have been trading with the system and they make their comment and observation. Now, this is how it works. you already know that for you to trade Forex, you need an account with a broker. Am I correct? That's the number one thing you need. On the account of the broker, you're going to have a trading account. A trading account. Now, once you have a trading account, this trading account is then connected to what is called MT5 or MT4. Okay, MT4 or MT5. Now, once your account is connected, your trading account, you know, the first thing there is the account with the broker. Under your account with the broker, you create a trading account. It can be standard accounts, whatever type of account you want to create, even if it's a prop firm account. Okay. Now, once you have your MT5 login details or your MT4 login details, you take these two details, take them to your MT4 and log into your MT4 account or your MT5 application. Okay. Now, once it is connected, you can now start trading. On your MT5, you cannot begin to do your analysis on your MT5. Am I correct? Please answer me. Somebody should answer me. Is that how Forex work?
Yes, you are correct. Yes, you are correct.
Okay, the person that asked this question, am I correct? The person that asked this question of how do you connect Akinashi to MT5? Am I correct with what I just said? Is that person still on the call? Okay. Let's continue.
I'm the one. I tell you,
Let's
are very
continue.
correct. I'm the one.
Okay, Mr. Rando.
Yeah.
Now, what we are not doing is we're not saying that go to TradingView and create an account with TradingView. Now, when you create an account with TradingView, what TradingView does for you is to help you see the market that you want to analyze. Okay, TradingView. Okay, TradingView allows you to see the market you want to analyze. Now, on TradingView, we have TradingView. We have all the currency pair, the same currency pair that you have on your MT5 and your MT4. Gold that is on MT4, MT5, you also have it on TradingView. So as the market is moving on MT4, so it is also moving on MT5. But the challenge that we are having as traders is what we have to do our analysis on MT4 and MT5 is limited. Unless you understand pure price action, Japanese candle price action. Once you understand that, then you are good to go. Or if you have a very powerful indicator, on the MT5 or on the MT4 that you know is working for you, then you can begin to work with those ones and
It's like your mic is awful.
Myself.
So you guys have not been hearing me since.
I think we had you to some extent now.
Okay, so sorry. So like I was saying, on your TradingView, there are some currency pair, and those currency pair, you also have those currency pair on MT4, MT5. So you can analyze the market from MT4, MT5 and begin to trade and make profits. But we are not telling you that since trading is difficult somehow for you, you are not being profitable because the indicators you have there on MT4 and MT5, they are not really helping you, or you don't understand pure price action to trade on MT4, MT5 directly on their charts. So we're not telling you that let me share my screen with you. You can see my screen, right? I believe you can see my screen now.
Yeah.
Now this is MT5. Let's do it practical. This is MT5. And these are the indicators on MT5. So usually, all you need is just your MT5. Your account connected with your broker like this. This is the broker. Account connected to the broker. This is the broker logo. So once my account is connected to the broker, I can now begin to trade on MT5. That is the usual way we trade Forex, the regular way to trade Forex. Nothing more than this. If you want to trade, you have to use the indicator that is here, or you use pure price action, just charts. Look at the candle. Price action is looking at the candle and making decision based on how the candle was open and closed, the formation of the candle. That is how you trade Forex. But now some people, even with this indicator, these indicators on MT5, they are not still profitable with all the indicators on MT5. Yet all of these indicators are not making them to be profitable. They are still not profitable with all of these indicators. And they don't understand price action to the way that they can become profitable. And you have MT4, you have MT5, you are not profitable. So we now find out a strategy that is helping us to make profits. And that strategy is what we call Aikinashi. So we are saying that instead of you to be using this regular charts, this is charts. If you go to setting, this is charts type. Okay, charts type. If I click on it, I see that we have bar charts, we have candlestick charts, and line charts. But on your MT4 and MT5, you only have access to 3 different charts: bar charts, Japanese candlestick charts, and line charts. Japanese candlestick chart is the most common chart, the most popular chart that everybody knows. But yet you are still not profitable with it. But there is another type of chart called Aikinashi. Even more than that, we have more than 10 different type of chart type. Chart simply means how do you want to look at the price. Let me shoot line so that you see. This is line charts. You see now, it is no longer candlestick but line. No longer candles. This is some people, this is what they know how to use to trade. They don't know how to use candlestick. So we're not telling you that we have an approach that we are using to trade Forex. This approach does not work with the normal Japanese candlestick. It works with what we call Aikinashi. The Aikinashi is not on MT4. Neither is it on MT5. No. We can only have it on TradingView and some other application. But the best application to get it from is TradingView. Which is why we now say go and create a TradingView account. This is the TradingView account. Create a TradingView account. And then when you create a TradingView account, you click on here, you see chart type. When you click on this button, you see, sorry, not that one, this one, this plus button, I guess. Okay, not there. So we're going to check this one, this 3 dot button. Okay, look at it now. You see chart type. What type of charts do you want to use to look at the markets? You see, we have about 1, 2, 3, 6, 9, 12, 13, 14, 15, 16, 17. About 17 different type of charts on TradingView. 17 different type of charts. So we are telling you that do not use the normal candlestick, the regular candlestick charts that everybody is using, which is like this. In fact, let's off the software first of all. Do not use the normal candlestick that every other person is using like this, which is confusing to you. You don't know what to do. Simply switch your chart type to Akin Ashi and select Akin Ashi. Now, when you select Akin Ashi, you can now see the market. We have discussed the strategy, the approach of how to trade with Akin Ashi on the course. So now, when you now know that it is time for me to buy based on this point now, this is the buy signal for us now. On gold, buy. How do you now buy the trade? Your broker account, where you created your trading account, is not connected to TradingView. Your own is just to come to TradingView and do your analysis and know whether to buy or sell. Now we now know that we can buy our trade here. Simply, you leave TradingView and go to MT5 where your broker account is connected to. My broker account is connected to this point, and simply take your trade, which is why we have a buy trade here. How did I get the buy trade? I come to the software. Software tells me to buy. The whether it's software you want to call it to, or whether it's the approach, simple trading methodology approach, the two of them is the same. This is the buy signal. This is the buy signal based on the simple trading methodology. That is the buy signal. Why? That is a strong buy candle that we cut above the ATMA. If I activate the software also give us a buy signal on the same place. So what do? I leave here and go to where my trading account is connected to, and I place my trade on that place. So it means that I am no longer using all of this software to do analysis. I am no longer using what is here to do analysis. I am no longer using all of this software, Parabolic SAR, or whatever software, whatever indicator that is on TradingView to do analysis. My work with MT4 and MT5 is just to activate my trade, either to come here and come and sell, or to come and buy. And what will tell me to buy or sell, I will go to TradingView and find out whether to buy or sell on TradingView based on the simple trading approach or the simple trading methodology, or based on the software. Do I answer that question for you, Mr. Randy? Or Mr. Rando?
Yes, I understand. Now that means the TradingView is mainly for analysis.
Just for analysis.
Okay.
Now the second question that you ask is, are we to use just $100 to trade this? Now, one of the I want to even redo the course again so that you get to understand everything clearly. But now understand from this training. You
that
see,
if somebody does not have $100 in account, that means he cannot trade Akin Ashi. That's what I'm saying.
yes. And I understand your question. Let me answer your question. Akin Ashi is a chart type. And that chart type, you can also view it from any time frame. Be it 1 minute even. You go to the 1 minute candle, you will see it. 1 minute time frame, I mean. Akin Ashi is also there. Okay. Go to 1 hour. Akin Ashi is there. Okay. But on the course, we talk majorly about trading with the daily time frame. Now let me switch to the daily time frame so that you see. And on the daily time frame, we say that you need to check the market just once per day when the last candle is opening. Now, anything that makes you trade on daily time frame, it means what you are doing is called swing trading. Do you understand?
Yeah.
Now, swing trading is not like the regular trading. Swing trading is more like investing. If you know what investment is, swing trading is like investments. Although the major investment is what we call position trading. Now, you must have heard that there are different types of traders, and you hear that there's a position trader. Do you think that these position traders are coming to the market to come and make 10% profits in one day or 50% profit in one day? No. Position trading is like you are taking a trade in January. That buy that you enter in January, that you have closed that same day. Most of us here will took trade in January, or let's work with January. Okay, that's buy trade that will activate in January 3rd of January. Some of us close that trade in the next 2 hours. Some of us close that trade in the next 5 minutes. Some close that trade before the 9th that day. Those people are called scalpers or day traders. Why some people add that trade down to the next 5 days. Those guys are called swing traders. That same trade, some people add that trade that they took in January, they add that trade from January till May. They did not close that position. They were just holding it. Those are position traders. So they are more of investments. They are using forex for investing. So they will put in about, let's say their capital is like $1,000, or let's say $10,000, for example. Their goal from January to May is to make about maybe $1,000 profit even. That's 10% in 5 months. They are okay with it. The emotions that we have in forex, they don't have those emotions. The forex does not play with their emotions like that. So they are position traders. So why I'm bringing this one out is for you to understand swing trading. Swing trading is the next type of trading that is closer to position traders. Okay, position traders. In fact, this guy said they might just even target, let's say 10% is good. Okay. Now, let's talk about swing trading. You are holding your position from 1 to 3 days, sometimes even 5 days, or even 6 days. You are a swing trader. Now, look at this. Let me leave good. Let me go to USDJPY. But what I want to explain to you works on every pair, or in fact, let me work it on good, because if I go to USDJPY, now most of you would think it's only USDJPY is working. Now, this is it. We got a buy signal here. This is daily time frame. We'll take notes. Where will be our stop loss? The last swing low. This is the last swing low here. Okay. This is the buy signal. And this is the stop loss below the last swing low. Now, this is a daily time frame. Imagine you take this trade buy here, and you are coming to use daily time frame to set this place as your stop loss. Oh, on your $100 account, If price should go and touch that place, your stop loss. Do you know the pips from here to here? It can blow up your $100 account on gold. Well, this is where the most reasonable point to use as stop loss when we get this buy signal. What if price now go and hit stop loss on gold? It will blow up your account. On USDJPY, it will take your accounts up to like $25 or so. Which is why we tell you that if you are trading this on the daily time frame, you have to go in with the lowest lot size and a minimum of $100 on the daily time frame. If you are trading $100, your lot size should be 0.01, because now you may be seeing it like the market just went up and went up. It did not come down. No, if we activate the normal regular Japanese candle, you will see that there is a small price movement coming down a little, and that small price movement coming down, that pips alone, if you calculate the loss that it will give to you, is enough to blow an account. It's enough to blow an account. Which is why we say if you are trading the daily time frame, even if it's $50 that you have that you want to use to trade it, even if you are trading with USDJPY, you are still on the safer side. On USDJPY, trade with 0.01. The $100 is good. Okay, trade with 0.01. In fact, if you are trading with the daily time frame, trade is 0.01, because this movement, that little movement downward like this, is enough to even take your account. But it will not blow your account on USDJPY. Okay, if it's on gold, it can blow your account if you're not so careful. Now, what do we now say? Again, I'm not telling you that only $100 can trade Akinashi. What I'm telling you is that even if this is not Akinashi, please, even if this is Japanese candle, normal Japanese candle, let me switch to Japanese candle. What we're talking about here is the daily time frame, not about Japanese candle. Aha. This is all got a buy signal. If the market was to go down one candle against you like this on gold, it may blow your account. In fact, just this point alone, just this candle, if we map past that candle, just as it will be too far, if we map past that candle at and go to the 1 hour time frame, you will see that this candle, there is a up and down movement. Maybe you entered at this point and market now went down on the 1 hour time frame like this. This 1 hour like this can blow your account if you're not careful. It can blow your account if you're not. Yes, Akinashi has told us that the market is going to go up, but there's in that particular day, that first day alone, market may just play with emotions. It can go down, go any high it wants to go to, but I can actually tell you to remain on the buy trade before that begins to go up. Now, if it has come up this day, you are not safe because your entry is below. You are not safe. But for that first day alone, it can blow up your account if you're not careful. If you're not careful, your account can go down. Or imagine that this is where we got the signal from to enter the trade at this point, and your entry was around this point. And Akinashi is telling you that, because Akinashi will be telling you buy green candle. The following day, Akinashi is showing you green candle, but here is red candle. That movement down where the market will drag down to this point, your account will blow if you are not using the right lot size. But Akinashi is still telling you to buy now. Let's use that as an example. Okay, let's switch to let's switch to, let me mark out that point. Okay, this is the point. Let's change the color. Let's take another point, another vertical line. Okay, so in between these two vertical lines is where we have two red candles. Let's map out our entry. Our entry is at this point. Let me use another object to map it at. Our entry is at this intersection. Okay. Let's change the color to red. Now, remember, this is our entry. And our entry, we took that entry on the daily time frame. Why did we take the entry? Simple. Let's go to candlestick, Japan, Akinashi. You see now, this is where we enter the trade. Are you seeing now that Akinashi tells us that the market is still going up? Akinashi tells us that the market is going to buy. This candle tells us the market is going to buy. We enter the trade. The next one says the market is going to buy, but guess what? On the Japanese candle, the market is going down. And this is a daily time frame. Look at where we enter the market from. Let me take our time frame down to 1 hour. Let me show you a true representation of what I'm talking about. I will take my time and go back until we see those two blue lines. Okay. These are the blue lines. Okay, so we took the trade on this particular candle. So you took a buy trade here. Before you know it, the next thing that is happening is what? After your buy, market begins to drop down. Imagine this drop. This drop alone on gold can make you lose $20. So imagine you are trading on gold. That is even if you are trading with 0.01, you're going to lose $20 on that drop. Now, if you are trading Japanese USD JPY, imagine you are now trading 0.1 and you have $100, or you are trading 0.05 and you have $100. This drop alone can give you about $10 loss. Panic will not begin to come in. Maybe you are not even losing $20 loss because don't know, this one is just small. What if the market actually put down so much? Panic will not come inside of you. You no longer want to even look at Akinashi again that is telling you to buy on the daily time frame. You'll be forced to close your trade on loss. And by doing so, you have defied the principles of the strategy. And you know what happens when you defy a principle one time? You just feel like everything you are doing is no longer working. So which is why we are saying that if you are taking your trade on the daily time frame, work with 0.01 on your $100 account. This is the entry. When these things is happening, going down, it doesn't concern you. You are firm in the market. Yes, maybe this point may make you lose only $2. If your maximum loss may be just $2 on 0.01. And then when market finally begin to go your direction, the next day you may just find out that you make just another $2. Now let's go back to the daily time frame. Let me show you something. And let's go to Japanese. Okay. So throughout this day, the market finally went up. But guess what? Market came down again. You find out that all you are losing maybe throughout it's about $2, $4 maximum. But before you know it, the market begins to go your direction again. Maybe at this point you are now making $6. Before you know it, at this candle, you're already making about $15, $20 because you see the spike. You're already making $20, $21. Before you know it again, another movement, you're already making $40. Before you know it again, you're already making so crazy amount of money. But on this day, if you did not take the trade with the accurate lot size, you would have blown your account at this point, or you would have been forced to leave the market at this point, and you would have been forced to say Akinashi is not working, and you would have not catch this move. Because imagine what Akinashi would have done for you trading with Akinashi. Akinashi would have just tell you that just buy that trade and hold on to that trade, which is there. Just tell you buy, hold, forget about what's happening, just buy, hold. They've actually cashed all of this move on profits. But what's helped you to do this in the first day of entry? See, let me tell you, one of the major problems you're going to be having with Akinashi is your first and second day of entry, especially when you are trading with the daily time frame. So for those of you who are trading with daily time frame, most of you are not trading with daily time frame. But for those who are trading with daily time frame, you have to be careful about your lot size, because a whole lot can happen in a day. Inside a day, some people will take a buy trade. They will make so much money. Inside that same day, that same currency pair that people have made money from buy, even that same people that make money from buy will enter sell trade, will make money. You are still on the position of buy. You have not closed. People have bought, have closed on profit. People have sell and closed on profit. People have bought again, closed on profit. People have sold again, closed on profit. You are still on your buy. You have seen $10 profit. Your $10 profit has gone back to $1 profit. But you are just holding. You just want to catch the long-term move. Before you know it, the market is just going your direction and you're making profits. So that first day is usually the first issue. I want to say the first day is usually the first issue. It also happens even if you are on the 1 hour time frame. That first 1 hour that you enter the trade is usually the first issue, this 1 hour. It is at this point in time that you say that you are not making profit at all. And you say, I saw a buy signal now. Why am I not making profits? Let me switch this to the Japanese candle. Let's see. Okay, so yeah, it plays out nicely. Profits from beginning to end. Okay, but see this one now. You will not make profit at all at this point before trade finally goes your way. So the first period is usually the issue, but Akinashi would have tell you to just hold. Okay, so that is it. Now, this call naturally was to teach us how to use the software, but then let's just continue to answer this question because it is also vital that we understand all of these things. Now we are still on what is the capital to trade. Must it be $100? It must not be $100. But if you are trading daily time frame, please have up to $100. But what if you are say you want to trade on 1 hour? You do not need $100 to trade it, especially if you are trading currency pair. Let me use currency pair because I don't want to use gold, because if it's good, I will tell you. If it's good, it's not about Akinashi. This is not Akenashi now. This is Japanese candle. If it's good, my recommendation for you is to have your $100 ready. The minimum you can use to trade good is $50. Not as if people don't trade good on $10 account. So, but if you really want to be consistently profitable, I will not advise you to trade good on $10. Minimum capital is $50. Okay. If you can trade $10, be trading 5 minutes and be cashing profits, okay, and grow your accounts. But to me, there's no consistency in scalping. Okay. There's no consistency in scalping, especially when you are a struggling trader. Okay, unless you have already cracked the code of Forex. If you have cracked the Forex code, how you can scalp, no wahala. But if you are still struggling to make profit in the market, leave scalping alone first. Focus on day trading. Anywhere between 1 hour time frame, 4 hours time frame, 30 minutes time frame is what you should focus on. Okay, so if you are trading good on 1 hour time frame, please don't trade it on $10 accounts. The same reason why I tell you not to trade daily time frame on $50 accounts. I tell you, if you are trading daily time frame, you must have $100. That's the same reason. Why? For example, this is where we have a buy signal. This is 1 hour time frame. Now on that buy signal, this is the buy signal. Probably you enter the market. You are not entering from bottom, or maybe market has already moved before you got the signal. So you enter from somewhere around there. Where's your best reasonable stop loss? It is below the last swing low. This is the swing low. Markets fell down to this low and begin to go up from here. This is where market change direction. So your stop loss will be below that point. So this is your best reasonable stop loss. And this is your entry. Now calculate the pips from here to here. If it's good already, you're already losing $20. It's just on one trade, and this is when you are trading with 0.01. On one trade, 0.01. Entry, stop loss will lose you $20. And you want to trade good on $50 account. It means if your first trade is lost, you have lost $20 out of your account. So it doesn't make sense. If the next trade goes on loss, of course, you can have 2 consecutive loss. If the next trade goes on loss, your account, on that $20 is gone, you have only $10. And anything make you lose $20, it means that the $10 you must lose it. Because that is when panic, fear, everything, all the emotions now come on top of you. And then you will lose it. Even the first $20, when you lose that first $20, it's a guarantee that you will lose your other $20, the $50. It's already a guarantee because more than half of your capital, or almost half of your capital, is gone. Imagine what it will do to you, to your emotions, to your psychology. Your trading psychology will be messed up. Everything you have learned about Forex, you are going to throw it away and begin to trade anyhow. So when you are trading with the 1 hour time frame, you also have to be careful. Yes. Imagine if I'm telling you that to trade even 1 hour time frame, you need more than $50 on gold. So, or let's say $100 is okay. But $50 can also do it, but you have to be very careful. Now imagine if it is not one day time frame. So it means you need a bigger capital, because when you are expecting, because when you are entering a trade, Forex is like probability. When you enter a trade, where you are setting that, okay, if this thing is going against me, because stop loss means if this trade is going against me, I will not close it. That's what stop loss means. Stop loss means if a trade is going against you, you will not close it until it gets to that point that you fix as stop loss. Because when price gets to that point that you fix as stop loss, you are certain that the price has changed direction against your entry. So close my trade so that I don't lose so much money. So what this means, if we are entering a trade from here and this is our stop loss, it means that If the market is going down, we are okay, the market should go down and put us on loss. We are okay, the market should come to this point and put us on loss. So even though we are losing $15, we are okay, because we still have the hope the market will still bounce up. But we are not saying stop loss means that if market not get to this point, we no longer have the hope the market will bounce up. What we feel the market will do is the market will begins to go down. So when price gets to this point, close us on loss. So what it means, people don't understand this in Forex as stop loss. Stop loss means that it is a point or a level that we are willing to accept the loss that will come out of that level if price actually get to that level. So whenever you take a trade and you put a stop loss, you want to have it in back of your mind that price may hit your stop loss. So on trading 1 hour time frame, you have to have, if you are trading if you are trading currency pair, you can trade 1 hour time frame with even $50, you are good to go. Even $30, you are good to go. $25, you are good to go. Even $10. I will not advise $10 sha on Forex. $25, you are good to go. Okay? But when it comes to gold, please no, don't try it. On gold, if you are trading with 1 hour time frame, trade with $50 and above. $100 is the best recommended. Unless you don't have $100, you can go to $50. Even on $50, you have to be very careful. On $50, it means you don't want to follow signal community. If you are trading $50, don't follow signal community. It means that you know what you are doing by yourself. You know when to close this trade. Because if you follow signal community and they give you signal to tell you, okay, put your stop loss here, and you are even using 0.01, maybe that stop loss will go and blow up your, that will take about $20 out of your account. So what determines the, let me go dive into the main thing now so you understand. What determines your, is it what determines your capital? Okay, let me say it this way. Your capital that you have determines the market you should trade, and also determines the lot size you should trade. Let's put it down. Your capital determines the pair to trade, number one. It also determines the time frame to look at that pair. Your capital also determines the lot size to use to trade. This is the summary of everything I've been explaining all this why. Your capital is everything in Forex. Your capital is your king in Forex. So if your capital is small, it means you have a small king. Capital is big, you have a bigger king. So your capital will determine what pair you want to trade. First of all, that's the first thing. You can't have a $10 account and say you want to trade gold. Don't ever try it. Unless you are just playing with Forex. Those newbies that just came into Forex that deposit $100, $10. You see them taking trade with on a $10 account, they are taking gold. You see them make profit, yes. But at the end of the day, you see them blowing their accounts. So your capital determines the pair. First of all, $10 account cannot trade gold. If you have $10 account, focus on currency pair and focus on the major currency pair. Okay. Now, your capital, you can't have even let's remove the pair now. We're done with the pair, okay, with the Forex pair to trade. Now, you can't have $50 capital and say you want to begin to go and trade daily time frame or weekly time frame. What I mean is you want to get your buy signal from the weekly time frame, or you want to get your buy signal from the daily time frame. Your capital is small for that. So if you have a small capital like $20 capital, $25 capital, focus on lower time frame. Now, why do I say lower time frame? If you have a $25 account and you are trading 15 minutes time frame, and your strategy or maybe your software like this give you a buy signal, that's the software has given us a buy signal. If software give us a buy signal on 15 minutes time frame, so you cannot actually enter the market on 15 minutes time frame buy. Okay, market goes up, 15 minutes time frame will give you an exit. You have closed on about $1 profit. Your $25 become $26. You wait again, market give you sell, you sell, come down, you close on profit, you make $3 profit. Your $25 has become, your $25 have become $27, $28. But when you are using that $25 to look at the 4 hours time frame, when 4 hours time frame tell you to even buy at this point, it will not tell you to exit the market here. You are still looking, you are still holding. Market is coming down, 4 hours will not tell you to exit the market. So probably that market has even gone on loss before 4 hours may tell you to exit. And you may be exiting when you are on $10 loss. You may be exiting when you are on $10 loss. Which is why I say, if you have a smaller capital, focus on 15 minutes time frame to find an entry, buy, exit, close on profit, get another signal on the 15-minute time frame, buy, exit, close on profit, buy, exit, sell, exit, sell, exit. By so doing, you'll be gathering your profits little by little. But if you say you want to enter the trade from the 4 hours time frame, yes, if the 4 hours time frame actually goes well, it can really put you on big profits. It can really take your account from $25 to even about $100. But that is if you know how to manage the major entry. And even the managing of the major entry means you have to enter with a smaller lot size. So your capital also determines your lot size to use. You can't have a $50 capital and you want to trade 0.1. It can't work. Even if you are trading currency pair, it can't work. If you are trading USDJPY, you have $50. Yes, I see people trade it. You trade with 0.1 on the $50 account. They are taking the risk. Yes, it happens. You take the risk and make money. But at the same time, those are the people who form the 95% of people who are losing money in Forex. They make money today. Tomorrow they lose it back. Like I saw somebody took trade on a $20-something account. Is opening 0.03, open about 4 of it. All the trade put together will be about 0.2 on a $20 account. Yes, the market may be going your direction at the moment, and you may close on profits. But the next time you will try such a thing, you will not know when the market will go against you so quickly and make you lose money. Even the profit you made from the previous trade, they will all go down. They will all go down. So your capital is everything. Your capital determines a lot of things in Forex. So if I have, for example, I come to the market with $25, what do I do and what do I not do? Number one, I know I cannot trade daily time frame. I cannot trade on 4 hours time frame. I can only use the daily time frame. I can only use the 4 hours time frame to know the bias of the markets, to know the trend of the market. But my entry signal should not come from 4 hours or daily time frame. Okay, now what pair do I want to trade is now my next focus. Okay, so I now know first I've fixed my time frame to be between 15 minutes to 1 hour time frame. Now, what pair do I want to trade? I have $25. If I want to trade gold, what lot size do I use on gold? The minimum lot size I can use in Forex is 0.1. 0.1, if I'm trading this on the 1 hour time frame, it will not work. If I'm trading it on the 15 minutes time frame, it may work. It may work. So I may be risking like $4 on each trade. If I don't want to risk $4 on each trade, then it means I should not trade gold. Okay, if I can't risk $4 on each trade, I can't trade gold. Because if the first trade goes against me, I may lose $4. If the second trade goes against me, I may lose $4. That's $8 is gone. If the third trade goes my way, I may recover and make profits. But if I can't risk $4 on each trade, it means I should not trade gold. Okay, so what do I want to trade? USD JPY. Okay, if I can trade USD JPY on $25 accounts. Okay, because I want to grow this account safely. Okay, I don't want to risk the account because what I will eat next month is going to come from this profit, from this capital, or from the profit I'm going to withdraw. So I don't want to risk it. I want to do it the right way. So I can trade USD JPY, I can trade Euro USD, I can trade GBP USD, all of those pairs. And I can trade 0.01. I can even take it to as far as 0.02 and even 0.03 if I want to take risk. Okay, and I can do like this: $25. I will work with 15 minutes time frame majorly, 15 minutes, 1 hour time frame, and I will trade one between this to this. I will not go above 0.03. If I'm on 0.03, I will not open another trade on 0.03. It means just one position. Or I can open 0.01 3 times. I will not go above like that. I will manage the trade until I make profit. It means I'm risking at least $2 for all of this trade if the trade goes against me. So all of these things are what you need to put in mind when you are trading Forex. You need to understand all these things. If you don't understand all these things, you find that strategy, that something that is working will not work for you. Something that is working will then not work for you. Okay? For example, now look at this trade now that we are seeing that the trade goes well, nicely. Okay? So you think that, okay, if I enter the market like this now, market will just begin to go up. Now, if you get this trade, you find that the market didn't just go up. Market went up, came down. It might happen that way. So you have to be very careful. If you now switch to like 1 minute time frame or 5 minutes time frame and go and find that point, okay, you will now see that this is it. It is at a point like this. Somebody entered this trade at this point. The market begins to go down like this. This is 5 minutes. So that person may even begin to think that the market is going down and begin to close that trade on something like minus 0.3 dollar or minus $0.5. That is money out of your account. And by the time you begin to close trade anyhow, then that becomes an issue. So you have to be very careful what time frame you want to trade with. Don't just think that the moment you enter the market will begin to go your favor. We also want to remove that thing from our mind, that the moment we enter a trade, the trade will go our favor instantly. No. Okay. So that is it. That is it. I have to stop this recording. I have to stop this recording and record again. Okay, but do you understand everything I just explained now? Or was I just talking, or was I passing a message?
It's understood. For me,
Okay, others, please. Was I just talking, or was I passing a message?
Understood. Understood, sir.
Okay. Okay, all of these things they are really, really vital in Forex. In my years of Forex trading, these are things I've come to understand that they play a major role in making you to lose your accounts, to blow your accounts, not understanding all of these little things. They are not little things anyway, but you may think that it doesn't really matter, but it does matters. Okay, so let's move down and talk about let's talk about how to trade with the software, because that's the reason why we came online today. Do we still have time to talk about it? It may take us another 30 minutes.
Yes, we can go on.
Okay.